Well then, it's time.
We're back with our man, Jamie. And by the way, just learned he operates out of RV, so I'm going to have to join him. My wife and I are going to have to join him sometime because that is just a way of life. But as we get into today's topic, it's our man. He's always about divorce. He has a tech that he's dealing with and stuff. But at the end of the day, it's what happens, right? So we've hit a lot about the personal side. We've dipped a little bit into the business side. We're going to dive deeper into what to think through when you're going through divorce and your business is involved, both from the lens of, hey, I already have a plan, it should be smooth, and those, like the majority of us, that we start a business in the middle of our marriage and our relationship, and we didn't really think about the business being part of a divorce or something like that. So without further ado, Jamie, welcome back to the show. It's August for us. This will come out in August as well. Glad you're having a great summer, and we're getting to the ends of it, but welcome back.
Appreciate it, man. Thanks for having me again. Great to see you.
So you said you had a story. Talk to us. Give us that real, client story, that real moment in time, and let's dive into this thing.
Yeah, well, we were talking a lot about the business leading up to business situations that come up in divorce, leading up to our chat here. And I know in preparation for this recording, you had asked me to look at some of the cases that we run and where the divorce the businesses fit into those particular cases. And I have one. It's a case study that I share with a lot of folks that do have businesses that they're dealing with in these relationships and in part of the divorce. And it's I see Durango, Colorado on your sweatshirt there, and that's exactly where this case actually took place. And the overarching theme of this was the gentleman is in stoneworks, right, and grading, right. So he does a lot of grading, like when a new development is going in, his company goes in and does all the grading to make sure like the houses, like the foundations are stable and everything else, and all the drainage and everything else. But they also do stoneworks. So you install a pool and then you put a nice pretty fountain in or whatever it is. They would do that type of work as well. Really cool little side business, so to speak, that they were claiming it was, or he was claiming it was, right? And so my client is the wife, his soon to be ex-spouse, and she hires me. A super nice lady, really very very friendly, very positive, very kumbaya, right? And oh well, we're just gonna try to get through this, and we're gonna try to make this an amicable situation, and I don't want to fight, and I don't want very just I just want to get this over with, and how do I do so in the easiest way possible? So we start diving into the case, and we start looking at all the stuff, and it's the, as normal, income, expenses, assets, and liabilities. Those four key things are the things that we start with. Also wrapped around what are the goals you have? What do you want your life to look like after the divorce, and so on. So we get through that whole process, and I'm surfacing tax returns, and I'm looking through the business profit and loss statements and so on, and I'm like, okay, how much have you ever had this business appraised? Oh, it's just he, at the end of the year, it's like $40,000 that goes on our tax return, and so it can't be worth much. Okay, well, let's peel back the onion a little bit, and I start going through the profit and loss, and it's just not making sense, right? Top line revenue in this company was like $2 to $3 million a year. Okay,
small little side business, just a little
small little thing he's got working off to the side. Okay, yeah. Well, tell me more about so now I'm going through the balance sheet. Tell me more about these vehicles. Why are there so many vehicles? There was a Polaris ATV thing. There's this thing and that thing all on the balance sheet. Why are there 5 cars on the balance sheet? Well, that's my son's car, and this is my car, and this is oh, okay. Now we're starting to put personal property under the business. Got it. And then that whole process just starts we're unwinding the string of yarn, right? It just kept coming and coming and coming, right? So I'm all right, time out. We've got to bring in somebody who can actually value this business, because it's got to be worth something. So we pay for the business valuation. She gets it done. Actually, at the time, I had a gal on my team who was just doing business valuation, so we did the valuation. It's like $21, $22 million, right? Because they're looking at top line revenue, competitors in this space, growth over the course of the last however many years, the actual assets they have and what those are worth, so on and so forth. And you're talking about, a $20 million business, real money. Okay. That $40,000 that this person put on their tax returns at the end of the year is because they wrote off every expense that they have against the business, including children's braces and things like that. So the long story short, the long story of the long story is if there's a business involved in a divorce, and it's not just a true side gig, right? Like if you're selling baseball cards on eBay, and making $2,000 a year, you probably don't need to worry about a business valuation. But if you have, $2, $3, $5 million in top line revenue, that is no longer a hobby. That is a real business, and it has to be factored in. And that's where leveraging professionals can assist with it. So that's we can dive a little bit deeper because I have so many thoughts about this, but that's the gist of the story.
Whew. Man, and I'm sure from our perspective, when we start seeing something, we start peeling it back. Everyone says oh, don't go down the rabbit hole. Diving into those rabbit holes uncovers just a tremendous amount. And what people understand and don't understand is on the outside, business looks somewhat simple. They're you see what you see, but there are so many things that legitimately you can hide, right? Air quotes for everyone that's listening. You can hide in your business, and if your spouse or who names it isn't privy to what a tax return looks like or the P&L looks like, you can really get away with a lot. And in your case, if she didn't have you, I'm sure there are attorneys out there who would be able to see it too, but realistically probably just would have went with, it only makes, we only make 40K, maybe some assets here, but not 20 million, right? There would have been no way that valuation would have popped up in regards to that. So let's get through some of that, right? I want to dive back into that, but I want to get to a little precursor to that, right? Our noise versus truth a little bit. In this sense, right? And I know every state's different and we have to deal with that, but in this mindset of, hey, now it's a $20 million business, is it always true that it's automatically 50-50?
No, absolutely not. And that's kind of how it shook out in this particular case. I think when all was said and done, and here's the thing about this business, right? It's a paper valuation, right? They don't have $20 million in cash. They don't have everything is tied up into liquid assets because of the vehicles, so on and so forth. So we had to get strategic with, okay, what are we going to settle for? How are we going to handle this over? Because obviously he's going to have to pay you out over time. He's not going to be able to do, just go get a loan for, whatever the number, $10 million in this particular case and give you half. It's not going to work. It's not feasible. And I don't think the courts in this particular case, even though I'm not an attorney, I don't think the courts would have pushed for that either. So it's all right, how do we handle this, right? And in her particular case, I forget exactly what the end result was as far as the dollars and cents go, because it was about a year ago. But let's call it $6 or $7 million paid out over however many years based on revenue of the business. She became a liability of the business, effectively, what it came down to. But it's not split 50. And there's also the sweat equity component of it. You can't if he. I forget exactly how many employees he had, but if the reality is he dies tomorrow, a lot of that business goes away because of the knowledge transfer, right? So it's not always 50-50. We try to get pretty close, but at the end of the day, most states, save for the ones that are community property states, aim for fair and equitable versus 50-50.
Well, but prenups save everything, right? Prenups protect it all. How true is that? Because when businesses get involved, I've seen them just not involve the business in general, but talk us through having a prenup or having the wrong prenup when it comes to affecting the business splitting.
Well, that's the main thing is having the wrong prenup, right? I'm a big fan of prenups. I'm a big fan of if you're going into a marriage and you have some sizable assets, you should growing up in New England, I'm a huge fan of Tom Brady, right? And for obvious reasons, but the one, he's a case study, and he and Giselle are a case study in having these prenups because they both brought assets, they both brought income, they both brought all this stuff into the marriage, and when all was said and done with their divorce, since it was so ironclad and done the right way, like there was no fighting. It was just like, hey, we've already agreed to this, and now we can just, like, if it ever happens, well, here we are, and now we can move on. It's those that are, the term we use is being able to pierce the veil, right? Like you have these prenups that are in place, and they were drafted on LegalZoom, or they were drafted by an incompetent attorney, or whatever it is, and there's so many different issues with them. I've reviewed several of them over the course of the last year, and some are like there's like no wiggle room. Others, it's like, wow, there's huge gaps in this, and it's challenging for me because I can't give legal advice. I'm not an attorney. I don't want to step outside the bounds of the financial, so I can't like speak to like you should have this clause in there, and you should have that clause, and this, that, and the other. But I can say they're not always as ironclad as we expect.
What can someone do to protect, like I had said earlier, is we don't all come into our relationships owning a business per se. Some
Mhm.
of these businesses pop up while you are married, and they
Mhm.
go from there. How do you then protect the business in that sense? Because that'd be after a prenup, really. That'd be
Mhm.
after, a few years after, and no one's really thinking of a business. What would be your advice generally to protect the business after the fact?
Well, and this is especially more complicated when you go into business with your spouse, right? That then it can be it's like a whole other can of worms, and that you have to deal with. But I mean, in general, the I'll just share with how we've handled it, right? So with the two businesses that we have, the beneficiary of those businesses by way the is our trust, right? So we have a trust that's established, and the shares that I own in SecureSplit, and the ownership that I have in Allegiant Divorce Solutions or Allegiant Solutions is all. If anything happens to me, there are contingency plans that are in place. There are people that need to know exactly how to step in, how to effectively unwind that. If the company is sold, those shares and those proceeds can easily be passed along by way of our trust, which is good estate planning if you're a business owner. Does that answer the question?
Yeah.
Uh, yeah.
Yeah, when you're
So,
married together. Now, what about they're separate, right? What if it's, like my wife and I started a business, but she wasn't involved, doesn't really want to be involved. What would
mhm.
be the best steps for me to protect my business that isn't just like, well, just because we were married, you're privy to 50-50, and we
Yeah.
have, maybe prenup was already done. What can we do when I start the business now?
Well, you can always leverage a post-nup, right? If you needed to, or go to have a post-nup drafted that includes the terms and conditions around the business. What I've seen work relatively well in these particular cases, and I don't know if this is the right way to do this, from a legal perspective, but I've had people just simply draft agreements between themselves and do their best to keep those assets separate, right? Like you have separate bank accounts, it's funded from separate monies, it's titled separately. You're doing all the things you possibly can do by way of your state. Like in the state of California, you can list your member owners of an LLC, or the shareholders of corporations and whatnot. You actually document that with the state, and if your particular state has those rules that are in place, that would be a fine time to document it with the state, so you have that paper trail. It's when you start doing the things like this gentleman did with the company, where he's running this. She's not going to go out there and run a backhoe, right? She's not out there, digging ditches and installing pools and grading, like working the bulldozer, right? It's just not going to happen. But he started putting, like, if your vehicle that you're driving on a day-to-day basis that has nothing to do with the company, the work you're doing for the company, and that vehicle is a person, it's effectively a personal asset that's either owned or just run through the business, you're going to have a hard time very hard time when folks like us get involved, of being able to actually paint the picture to the courts of like, oh, but no, that's, the company owns that car. Like, okay, well, she just drove 25,000 miles last year in the car. Any particular reason why? Like, you need to be able to answer those questions. So do whatever you can do to try to keep those boundaries in place is essential if you don't want it to come back to bite you later.
Yeah, 100% agree. All right, let's go back to your lens when we were talking about valuation.
Huh? Yeah.
And I think you nailed it. And I want everyone to really listen to this, regardless of divorce. Valuation of most of all businesses is a paper valuation. Okay, right?
Mm-hmm.
We see that Elon Musk is the richest man in the world, worth trillions. Congratulations, yeah, but he's not that liquid. So like, don't think just
Mm-hmm.
because this valuation is super high that you're entitled to this or that they're actually worth that, because it's just not true. To be fair, it's just not true. You need to be more looking at what's liquid and what's available, because otherwise
Mm-hmm.
it's either blue sky or it's just on paper, and that is vitally important. So in this, in that conversation with her, when you saw the valuation, and I'm sure her eyes lit up. How did you explain that concept to her to get her to, and hopefully if she was already realistic, that's awesome. But not
Yeah.
everyone is that realistic. They really want to stick to that point. How did that conversation go?
Yeah, I mean, I think I have a business valuation expert that I was working with at the time, also, in on that meeting with her, and if you look at a true valuation, as you've probably seen them as much as I have, but for those that haven't, if you look at a true valuation, it's going to dissect everything, right? Like the competitive landscape, the tax landscape, the knowledge base that you need to be able to have to run this particular business, demographic information, the appetite for this, like all the stuff, like anything like if you were ever going to go into a business and you haven't started the business yet and you started building out your business plan, you need to gather all that information to build a true business plan so you can understand, like, okay, like here's the competitive landscape, here's my strengths, weaknesses, opportunities, and threats to the business, my SWOT analysis, right? And that's how these valuations are conducted. So and then there's the mathematical component, like taking the last, it's a very young company too, which is pretty incredible about this, but taking the last 3 years worth of revenue and extrapolating that out over 5, 10, 20-year time frame. And that's where, like, that's usually these businesses, as like you're talking like 2x, 3x, whatever, like that's, if you and I were like, when I sold my wealth management firm, we're looking at close to 3x, and that's roughly what you're going to get as far as, the valuation for a business. In this particular case, there were just the lack of competition in this particular area, like a variety of factors that pushed it to like, 7, 10x. Now that, if they revalue that business over, say 5 years from now, that number could drop drastically, but the top line revenue is probably going to go up as well based on the growth that they've seen. So we may the valuation may stabilize over time, right? So for those of you that are listening that have experience in this area, like a 7 to 10x valuation is pretty exorbitant, but there were a variety of reasons why, the valuation expert decided to put that number on it. And that's effectively what I had to explain to the clients. Like you and I initially in our first planning meeting together gave me the impression. I think your understanding was that it was basically worth next to nothing because of all these expenses and everything else. But when you pluck out the cost of the cars and all these things, and even though you're taking them out of the equation, we call them add backs, right? So what are your add backs for income, for support, and so on? Like you got to take all those things out and add them back to the bottom line to show exactly what's available for support, for what's up for division, and so on. And I think when I walked her through the mechanics of this and tried, and it was more about education of like how this all works, the light bulb went off. And you just need to understand how these things work. And it's, if you're not dealing in this space every day, and not just in divorce, like in financial and stuff in general, it can get super confusing really quick.
Yeah, it's definitely not as simple as, oh, it's valued at 20 million and give me half. It's there's
Yeah,
a lot that goes into it, and I think that's an important piece for everyone to understand. Of a business valuation, or when you see the value of a business, it's not as simple as you would attempt to see. Now,
exactly.
publicly traded stuff that different valuation
More
for different
transparent.
purposes. But for the
Yep.
private
Yep.
side, it really is a tool, and they're not cheap, right? To get your business value isn't a cheap process or slow. It is a lot of steps, and it's very important. I think you hit
Hmm.
a really good point that we're going to highlight specifically in the newsletter of when you are a new business owner, you're starting a business, you should learn what all of that is so that way you can build it properly for what you're wanting to get done. And I think that's a
Yeah.
huge piece that many business owners do not do is building your business to be sold or for the highest valuation is probably the best route because then you can at least flexibly do something later if you wanted to. But retransitioning in the middle of it and trying to fix things does cause problems, organizational problems, logistical things,
Huge.
you name it. But that definitely is a different episode from that perspective. But let's get into a tool that I know we use all the time in business ownership, and that is the buy sell, right?
Yep.
There are a lot of different ways to build a buy sell, but I know specifically buy sells are going to come into place specifically when you have a spouse, whether that is you're both owners and what happens when one of you dies, or I'm a partner with you, Jamie, and we have cross purchase sales for both of us and our wives. Talk us through, not in super detail about buy sells, but how buy sells can be affected in a divorce situation, and from your opinion, how to deal with those situations.
Yeah. I mean, this can get really complicated really fast too. But um, you know, if you're a business owner and you don't have this type of agreement in place, especially if you have partners or you have co-founder like myself and so on, or even a spouse as a partner, it's definitely something to consider, right? Like that along with key man insurance and all the other stuff that we can get into, we could spend a whole podcast on. But
Yeah.
even those buy sell agreements have value, right? Because that the business will be a going concern if something happens. So if you if you have the unfortunate experience of going through a divorce, the especially as a business owner, the main thing is like, how do I protect this asset? Because it is an asset, right? And if you have a business that is supporting you and going to be supporting your soon-to-be ex-spouse, having this type of instrument in place, it can be amazingly helpful. Because if something, if you decide later that you want to walk away from the business and you have this agreement in place, then there's a mechanism in place for like who's going to get the right of first refusal if I happen to sell. If I decide I want to retire, I want to walk away, or if the business puts me in a position where I need to liquidate and I need to be able to pay off my ex-spouse. So I don't recall in my particular case that we're talking about if there was. I don't believe there was a buy-sell agreement in place. That was a little bit of a boo-boo on his side, but um, having having this instrument in place, especially if there's a liquidating event that's needed, can be super helpful, because then you've already basically outlined what those terms are, who has the right of first refusal on that sale, and so on, versus trying to scramble later and figure out, okay, like, all right, I have to come up with $7 million, $10 million. How the heck do I do this, and who am I going to go to first?
And I want to hit upon point. It was like when we say buy sells in our industry, there's the side that is only insurance focused, right?
Hmm.
Part of it, and then there's like the actual agreement. Here we're talking a little bit about both, but mainly the agreement, right? It's a policy
Correct.
of
Hmm.
what happens
Hmm.
in the event of this happening, this happening, this
Hmm.
happening, this happening.
Yeah.
And
Correct.
that's kind of the agreement that we're talking about. So those listening, like, yeah, there's life insurance of funding it and dealing with it, or disability and funding it. We're talking about
Hmm.
the agreement in itself, because there's mechanisms in there that can come into play. Like, for example, I can evaluate my business as a buy sell and say, realistically, it's worth $2 million, and that's going to be in the agreement for someone to buy, even though 10 years, 20 years down the road, it's not. We have already predetermined our agreement, what we've
Evaluation.
decided
Hmm.
to do. And that's important caveat for those listening. Like, we're not just talking about the funding mechanism, we're talking about the agreement itself.
Exactly. And you brought up the good point about the insurance piece too, right? So we see this happen a lot, and business owners will tend to drag their feet when it comes to insurance and not have proper insurance in place. And that's where the key man comes in, right? Something happens to you, you happen to pass away, and maybe you're the main operator of the business. And if you pass away, you still have employees to pay, you still have overhead expense, you have all the other stuff that are associated with it. That insurance will cover a lot of those costs, and also put you in a position where if you do have support to pay, or in this particular case, if there's a buyout over a period of time, and I forget exactly the terms, but let's say it's I don't know, $500,000 a year for 10 years or whatever the number is, and you don't have that cash on hand in the business, and that's an obligation. And in this particular case, the wife is a creditor of the business, that the money is due to her. Having that insurance in place to be able to cover that in the event of your demise, unfortunate demise, would go a long way in protecting her as well. So we always, obviously not related to the business, but in all of our cases, when support is owed, we will always ask, to at least explore the option of putting insurance in place to be able to cover those payments.
Absolutely. And it's not like we're insurance salesmen only. Like, it's part of a plan, right? It's a big,
100%.
it's part of the
100%.
plan. It's not just getting you insurance to get you insurance. Like, it is part of the plan. What is one hard truth that you want to tell the business owners right now, or the spouse that's listening, about a situation like this? Just a very hard, blunt truth that they need to know, and it might not feel comfortable for them.
If you think you're going to hide the money, you're going to be unfortunately surprised at what we can find, right? When we go through the balance sheets and the profit and loss and the bank statements and other records and so on, even just the tax return tells the story, right? We have a bunch of cases where, again, bottom line, like looking at the total adjusted gross income, and it's a couple $100,000. But then you go back a few pages and the K1 has retained earnings of 2.5 million, right? Like all that stuff is like, you can't hide around the money. So, and you can't hide the money, right? So if you think you're going to, and you're going to be smarter than the average bear, the reality is you're going to be unfortunately surprised at what we can find. And we leverage software, we can leverage AI, we can leverage OCR and all that other stuff to be able to parse out the information we need to be able to build a case, and we do it all the time.
Love that. So don't try it. Basically, don't try me.
Not even worth it. Not even worth it. Not even worth it. Not even worth it.
No, not at all. All right. As we get to every end of every episode, it's always about the plan. Like, what can people do right now to either better themselves, get in a better situation, or, for those that are potentially going through divorce, to see something like this? What would you say is a very good next step for those that are listening to move forward with wherever they're at, to ensure either they're protecting their business or mainly protecting themselves in case of a divorce or a pending divorce?
Biggest thing is to know what you own and know what you owe. I have so many people that come to us and they don't know. They have credit cards all over, 10 different credit cards, and they have a bunch of bank accounts and brokerage accounts and everything else. They have clueless as to what the actual balance sheet looks like. And it's very, very simple. So just know what you own and know what you owe. And that is if you can do that, and then you're up against the unfortunate experience of divorce, you're going to be light years ahead of most people that come to me to get the help.
Love that. And I'll double down on it and say, if you are a spouse of a business owner, know at least their balance sheet and P&L, but get to know what's going on and what is what. One, because mostly I've seen this, you're probably an owner on paper for them and you don't even know it, right? So get to know as much as you can, ask the questions. You are privy to that information. At worst, get a tax return, go to a professional like us, and we'll be able to peel that onion back, like you had said earlier.
Exactly.
So without further ado, Jamie, again, I appreciate everything that you do. Look forward to catching more up again about your RV adventures and life on the road now. And everyone listening, again, thank you for tuning in. If you're unfortunately going through this situation, go ahead and reach out to Jamie and his team. If you are wanting just a little bit of feedback or understanding where your plan is, you can come reach out to us at Black Mammoth as well. But without further ado, Jamie, again, thank you for everything. We look forward to the next episode.
Of course, man. Thanks for having me.
The preceding program was sponsored by Black Mammoth. Any awards, rankings, or recognition by unaffiliated third parties or publications are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Black Mammoth. Information regarding specific awards, rankings, or recognitions is available on the Black Mammoth website, www.blackmammoth.com. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions and securities or the rendering of personalized investment advice due to various factors including changing market conditions. The information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up-to-date, Black Mammoth do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature and is provided for informational purposes only and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Past performance is not indicative of future results.